Hey guys, welcome back to another Sunday night show for this upcoming trading week. This week I'm actually drinking Rogue Colossal Claude. It's pretty good. It's an IPA similar to Lagunitas. I do actually recommend this if you're into IPAs. Let's go over some things that happened last week. We obviously had Tilray as one of the big plays from last week. It kind of bricked pretty hard. It didn't move in either direction very much at all. This was a shock to me, but it was also a shock to the overall market because you can tell when looking at the implied volatility of Tilray options, people were paying heavy premiums, both on calls and puts based on the earnings date. So what this means is people were willing to pay up so much to buy Tilray options either way, both to the positive side to the downside, that these options were very expensive. And what ended up happening is if you bought call options or put options on Tilray, you lost a lot of money. If you sold them, you made a lot of money. So Tilray really didn't have the big move everyone was expecting, and it slowly grinded down a little bit on Friday. Still sucks for me. I'm probably going to hold this as a long-term play on marijuana. This might change in the future, and I'll let you guys know if that is the case. The other thing I kind of want to talk about is seems like the market started to bounce back because of thoughts that the debt ceiling, that's all BS or whatever. And I mentioned it to you guys a few videos back. That is BS. The market could fall for a lot of other reasons, but the debt ceiling, I mean, come on, these senators are going to agree on something at some point. They're not gonna put the whole world into third world poverty just because they can't agree on, you know, a budget or a bill or a debt ceiling or things like that. So those are not things I'm really worried about. S&P grinded almost back to 4,400. Let's see if it's able to cleanly break above 4,400, and let's see how high it can go. I'm gonna have some doubts. It is the month of October. The tape action was very strong towards the end of last week to the positive side, but a lot of things could come up, and the big one is the Fed tapering. There could be some news about Fed tapering coming out even this week. Let's pay attention to that. And on the positive side, we have the infrastructure bill of $3.5 trillion. Let's see what happens there. So there's both positive catalysts and negative catalysts. The negative catalyst being the Fed taper as well as the Chinese Evergrande whole debacle that's happening over there. The market has yet to shrug all this stuff off. And the Fed taper is a really big deal. And what this means is with the Fed buying less assets of bonds, injecting liquidity into the market might not have the legs it once had to stand on. The printers, the market might not have the printers of Jerome Powell to stand on anymore. We'll see. I have a couple of smaller short positions on, but nothing of size. But maybe at some point I'll get to short in size. We'll see. I got buried alive last time I tried to short in size. Anyway, I'm still watching SPY, SSO, SDS. I think the volatility might come in a little bit, but remember October is a volatile month. So keep that in mind. One stock I want to talk about that might be off of most people's radars is XENE Pharmaceuticals. It had a share offering last week and the stock is just going higher, guys. It is ripping higher. XENE. It's really impossible to say with these types of stocks. My general rule of thumb is follow the herd and don't take bets the other way. Don't say to yourself, it's running way too high, I'm gonna take a short position on this. You should have learned your lesson from GameStop or AMC. I never did that with any of those names, but just follow the trend with something like XENE. If you're able to get a locate and it's dropping like a rock, which a lot of these names do after a run up like they have, take a short position. If it continues to run, take a long position, but also keep in mind it has run up quite a bit. So outside of that, the next thing I want to get into are the Chinese names. It seems like some of the Chinese ADRs are bouncing back. The market seems to be shrugging off now the Evergrande scandal, but there are some key levels that I would watch before, I would feel safe. So NIO had a huge shout out from Goldman Sachs where they said this stock can go up 66%. It was over 60 some dollars, like $65 a few months back, and it's really come in a lot. And it's up to you guys to figure out if you want to buy it right here at $35 a share. It is a Chinese ADR. Right now, it's really hard to say. Maybe wait till it hits 40 and a clean break above 40, take a swing trade. I'm keeping it as a day trade bias to the long side until it hits 40, and maybe I'll keep an overnight position. Then you have PDD. PDD is very close to breaking above 100 after quite a brutal sell-off, and it's well off its highs. Above 100, maybe worth entering, and JD.com, a break above 80. It's trying to bounce right here. Usually when I see a formation like this, it will break above it, but honestly, one bad news from China, Evergrande, whatever, all bets on these stocks are off the table. I don't know where they can end up. Also, one other thing, Charlie Munger has actually doubled down on Alibaba stock. So I think they're buying more. Alibaba really has not been moving. One of my first videos I ever did on YouTube was trading Alibaba. It was at $220 a share at the time. That was years back, you guys. So it's $160 now. So he's doubled down his bet. I kind of understand it, but there's also, for me, there's always that fear with the Chinese ADRs. Now, if Warren Buffett and Charlie Munger feel safe, then maybe I'm over exaggerating my fears with these ADRs. And let me quickly explain. I keep promising I will be doing these videos explaining ADRs, but let's be real here. I don't make jack shit off of YouTube. I do this for fun. I make most of my money trading stocks, and I just have to stay focused on trading stocks. So one of the main risks with ADRs, here's a quick rundown. You buy a stock like Citibank, Bank of America, something like that. You buy shares in those companies. You have a piece of that company. You technically own a piece of that company. When you buy shares of an ADR, you don't actually own shit. China does not allow us to buy directly any type of equity directly in their markets. So what they do to kind of get US investment is create these structures called ADRs where some trust actually claims they have some sort of ownership, not even direct shares. You're owning a vehicle, usually in the form of a trust, sitting, it could be in the Cayman Islands, that claims they have access to ownership of the company. China is a communist country. They could one day come out and be like, hey, all these ADRs don't own shit. Their claim on ownership of our companies doesn't exist. That's all fake. And basically your ownership in these ADR shares are worth nothing. That's one of my fears. Charlie Munger does not share my fear. And Charlie Munger seems to have read very thoroughly, because they do that. One of the things that I recommend you guys do if you do share my fear and you want to own these names, PDD above 100, JD above 80, Alibaba, is to, if you do want to own them, buy call options, leaps on these 1-2 years out. A lot of times, if you time it well, you can potentially get leaps on these stocks for a very, very small premium. Still get the exposure you're looking for. On a positive move, these leaps will still go up, but significantly less capital exposure. These Chinese names are in play because it seems like the market is trying to shrug off the Evergrande scandal. We'll see how that plays out. So let's watch these. So right into earnings now. Wednesday, we have Alcoa, ticker symbol AA. Alcoa has actually put in a double top right around 52. I mentioned this last week, super bearish. Having said that, a very positive earnings news can easily cause it to breach above 52. So we'll see how earnings plays out. Morgan Stanley upgraded this to about $62 a share. Guys, upgrades a lot of times don't mean nothing without technicals backing this up. So let's see the price action after earnings on Wednesday with Alcoa. Chances are you're going to be able to trade this Tuesday, Wednesday, Thursday. It's not the most volatile, exciting trade in the world, but it is a trade nonetheless. Let's see if it can break above 52. Other than that, I might take the other side of this, but we'll see. JP Morgan is also on Wednesday. JP Morgan is one of the banking names, and the rest of the week is pretty much banks, you guys. So JP Morgan is one of the banking names that has no resistance above its current price, 170. Realistically, there is no resistance above JP Morgan. We're gonna see what earnings does. Obviously, a bad earnings could drop this like a rock. I don't know. Jerome Powell's tapering might actually help this stock. Just watch how earnings plays, how it trades on the day of earnings. I probably wouldn't gamble on this before earnings, but JP Morgan is a big play this week. Delta Airlines is next. So Delta Airlines has been trying to make a comeback ever since the pandemic low of $22 a share, maybe a little bit lower than that, but it's at 43. Airlines have been picking up some steam, and I feel like it's trying to break a little bit higher. It could go either way. This actually might be one of the few times I take an one of my legendary earnings gambles that you guys have not seen on camera in probably years. I might do that with Delta Airlines this week. So slightly biased towards the long side, but Frugal Tiger has a history of screwing even the basics up. So let's watch Delta Airlines. Okay, so Thursday we have Citibank, Wells Fargo, Bank of America, Morgan Stanley. So Citibank, ticker symbol C, Wells Fargo, WFC, Bank of America, BAC, Morgan Stanley. The one I'm actually watching the most here, you guys, is Bank of America. And for the main reason, it has no resistance, really, from right now where it is. Bank of America was one of my largest exposures last year. I personally like the stock, but we'll see. Earnings can change all that. Wells Fargo has a lot of issues with integrity, and they're still suffering from some things that happened from years back where they were fraudulently opening up bank accounts. Who the fuck does this shit? But Wells Fargo does. It's kind of why I avoid Wells Fargo. Citibank has a huge exposure internationally, and kind of why I'm kind of avoiding Citibank between them. And a lot of other countries are not doing as well as the United States right now post-pandemic. So Citibank has one of the largest exposures internationally. So maybe lay off a C a little bit and watch Bank of America. So we have United Health UNH on Thursday as well. I don't want to talk about that too much other than it's a great earnings trade. I would definitely buy it if it breaks out. That's more or less all I have to say about that. Maybe short it if it cracks. So lastly, we have Goldman Sachs. It had quite a run to 420, and then it kind of dropped, you guys, down to 390, almost a 7% correction. The overall market did actually perform pretty poorly during its correction, but Goldman Sachs never actually got bought back up. So we're gonna see if banks start doing really well next week. So early on, if you notice stocks like JP Morgan, Bank of America, Citibank doing well, you could potentially take a gamble on Goldman Sachs before earnings comes out to see if it will break past 420 on earnings. It is gambling. Sometimes it works out pretty well. So watch the other banks earlier on in the week. This is the one bank that has actually almost corrected. And if the other banks do perform well, potentially buy this bank, as banks are a very correlated industry, and if one or two banks do well, probably one of the best banks in the world will also do really well. And that investment bank being Goldman Sachs. So that's more or less it for me. I rambled a little bit too much. This beer actually made me pretty tired, but hope you all stay focused, have a good trading week, and let's make some money. See you next week.
I just want the money, 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 money.